Hi, good evening, everyone. Hope everyone's doing well. Ever since the last sell-off in Friday, I think got some clients asking us, oh no, is it time to panic or is it time to actually go into the market? So today's videos, we're going to just address some of the concerns and then 4 things to actually note. All right. So as we know, just last Friday, Dow tumbled over 475 points. In fact, I think intraday low, it actually came off about 500 plus points, and then S&P also suffered one of the biggest loss since January. Right, some of a couple of reasons was because there's a rising oil price due to the tension in the Middle East. All right, then there's also the import data. All right, the inflation data also hotter than expected. So I think we saw some selling all coming in from then. And of course, then the expectation of a rate cut also was pushed. Originally, also great consensus, bigger consensus that it will probably cut in June. But right now it seems to be shifted in September. So I think we're seeing some pullback from there. So actually, is it time to sell? Or is it actually now the time to get in? All right, as we also can see, quite a few more doomsday prediction. Right, just recently also a Business Insider, we can see prepare for stock to plunge 30%. All right, then that rebound before the presidential election, that crash again. All right, so there's some fears out there, right? Again, okay, for the S&P to crash, 30% is actually a lot for an index. Okay, another from Business Insider, another news, a 32-year veteran warned the S&P is set to fall 50 to 70% in the years ahead. Okay, so this was just quite recent, just March 30th. All right, more and more of such news are coming out. JP Morgan's warns of potential for flash crash has stopped historical stretch. So if all this is scaring you, or you're thinking, oh no, should I sell my portfolio? All right, always have a chat with us if you want. You can always find our description, our contact, and the link below. We're always happy to meet up for a chat. Okay, 4 things to note very fast. What we can actually be looking at. All right, what happens after a strong Q1? So we all know that Q1 S&P actually moved up close to 10%. What happens after that? We'll just cover that. Okay, and the seasonally weaker months during a presidential election year, we also cover that. All right, and it's a pullback normal. So what we're seeing, is it normal or is it out of the ordinary? And lastly, where's the greed and fear index, which could just help us to guide our action too. Okay, so firstly, the seasonally weaker election years. Okay, this credit to Fundstrat. All right, we can see in a typical year of election year, right? March and April tends to come down. Okay, we didn't really see that in give me a minute. Right, we didn't really see that in March, as much as we were hoping for pullback. The pullback only started happening in around April. So right now we can see the April actually coming down. Okay, and then after that, in May it starts going up for the whole year. Okay, we might see a similar thing happening, right? But I think hold your horses first. Let's see how April pans out, and then whether we have a sell and go away in May. All right, another one from research from Bank of America. We can see that from election years, all right, April and May seem to be actually the weaker months. Okay, you can see that April is actually almost close to negative, and May we always see a bit of about 70% chance of it moving down. Okay, so sell and go away in May might happen this year, or as we are, in the mid of April. In May we could actually see a bit more of sell off. Okay, and what happens after that? The next 3 months, June, July, August, we start to see it move up. Okay, then September, October, a bit of down, and we should actually finish on the year up. Okay, so this just gives us a guide, a bit of a probability on where we could actually see the next 2 months happening. Okay, and so don't panic also if you actually see the market coming down. Later also, we'll just cover a bit of the technical aspects, what levels to actually be looking at if you are thinking of scaling in. Okay, next also, what happens after a strong Q1? Okay, S&P set for the 12th strongest Q1 since 1945. Okay, we end up about close to 10%, like I said earlier on. All right, what happened to Q2? We can see from historical data, usually Q2 kind of ends up in a positive after having a double-digit upside for Q1. Okay, and then after the end of the full year, up also. All right, so we can see this year we are close to 10%. Maybe Q2 it could be a bit flattish. Right now we're seeing some pullback. That's, in my opinion, healthy. And in fact, we could actually take advantage of this pullback. If you missed the bull run last year, all right, take this chance. Maybe you can actually start to scale in. Okay, and we can also see a subsequent sell-off of 5% or more after a good double-digit gain in Q1. So it happens. Look at the time that it happens. All right, so around March it happens, April, September, April, July, April. It doesn't really, this is not a very good gauge. It can't really conclude. It's not conclusive when will the pullback happen. But we can see maybe it's around April, May. Like right now it's happening around April, May also, we can see. And sometimes there's actually also a second decline. All right, but later I'll go through whether what are the odds of this happening and see how we can actually position ourselves. So usually after a strong Q1, we could see a little bit pullback after that. So a pullback is perfectly normal. Okay, so is pullback normal, right? Pullback to us is perfectly normal. In fact, volatility is a toll we pay to invest. We don't want the market to always just keep going up, right? It needs to go up, go down, go up, go down, go up, go down, go up, like that. Okay, if you just keep going up like that, everybody will keep telling you, oh, Kelvin, so expensive, so expensive. You won't dare to come in. All right, just a couple of weeks ago, everything was so expensive, you know, it's so high, nobody dares to get into the market. Right now, the market is coming down for us. Will you dare to actually enter the market? Or when it comes down now, you'll be like, oh, I'm scared got crash, scared got war, scared got this, scared got that. Then you wait, go up, then, oh, it's too expensive, I don't want to go in anymore. Okay, so that's what we always face with clients. Hopefully this also helps. Okay, so we can see a 3% dip is very normal, happens about 7 times a year. 5% mild correction, which is actually what we are seeing now. S&P has pulled back about 5%, 3 times a year, also very normal. A 10% correction happens once a year. All right, so if we could get a 10%, which I'm hoping for, happens once a year, I think it'll be quite an ideal situation to get in. Okay, so pullback or crash, we can see that earlier on I said 5% or more, about 3 times a year. Okay, it happens, you know, average length is about 43 days. Okay, 10% or more, about once a year, it takes around average length around close to 4 months. Okay, 15% or more or 20% or more, this once every 3 years, once every 6 years. Hopefully we don't see this too, all right, because it already happened for 2022 and during COVID. So hopefully we are kind of out of the woods for that. All right, and lastly, you can see the greed and fear index. For a very long time, it was actually over here, the extreme greed. The greed, if you've been following our blog, if you've been reading, it's been here, and right now it's actually coming back to the fear side. Okay, if it ever hits into the extreme fear, I think it's another good time to actually be looking at the market, as what Warren Buffett always says, right? When everybody's fearful, that's where you start to be greedy. All right. Okay, and then we're just going to take a look at S&P. I promise where are the areas to look at. Okay, from the top, right now actually it's come down close about 4 to 4.78%. Okay, it's a healthy pullback, as we said. It could even pull back further to about close to 5,000. Right, usually 5,000 would be a bit of a psychological support. If not, I think we could at least see 4,950 level. Represents about 6% pullback only, which hopefully you wouldn't panic, wouldn't be scared. Okay, then the next level, about 8% pullback, we could see around 4,800 level, 4,800. I think if it could come down here, this would be then a good area to actually be looking at. So hopefully with that, if you got any help, if you need any help, always just reach out to contact us. If you like any portfolio review, we'll be here also. Our contact all below. You can just contact us. All right, see you in our next video where I'll probably share another 3 more stocks to look at to put in your portfolio.